We know that in Romania, transactions, cashless transactions, cash transactions in point of sale went down from 84 to 76% in the last 3 years. Bayame, my first question will be to you. As you oversee like 50 banks on 20 regions, where is the line between going fully digital and inclusion and exclusion?
Thank you, Maxim. This is a very important question and very relevant. We are in an area of digital revolution, and we really need to be sure that we go digital, but we are also inclusive. So, as of my opinion, and also representing what we as World Bank really care of, is that we need to really go on digital rails, but we really need to think through how we can be inclusive. So the digital processes, the digital access doesn't create friction on clients that are not able to be digital. So personally, we think that in our market, there are people that might have difficulties on accessing digital. It's not that they are against digital, but they have constraints. And these are vulnerable populations in rural areas, low-cost income households, elder people. They might need to have all the financial services, not necessarily on a digital way. So what we need to take care is that we create digital rails based on a client journey or customer journey, and we are sure that we prepare in this digital rails the transition from digital to cash or cash to digital. So we really need to be mindful that efficiency doesn't come with the cost of leaving the population or vulnerable population outside of the financial sector.
Yeah, thank you. And Andrei, follow-up question for you. Romania legislated mandated electronic acceptance. Is it actually including people or putting cash on the ground?
To be very honest, the idea is a good one, but it's not enforced properly, meaning that if you go in the more developed areas, yes, you'll find the solution, but the need does not necessarily exist. There is a bigger need in the less developed areas, in the rural areas, so on and so forth. And if you go there, unfortunately, the POS is not working, the digital part is not working, because that's where we also find a bigger chunk of this gray economy. And sometimes it's cheaper for those small markets and so on to continue using the cash. And sometimes this doesn't help to move from the cash into the digital sector, as well as to offer some of the benefits of the new digital tools to those people that need to be better and better integrated in the digital ecosystem. So I would say even if this exists, the usage is very, very low, towards less than 1%. And we've seen the request. Many came to the bank saying, look, I want to have a POS on my mobile device, this sort of soft POS, easy POS, and so on. But are they really using it? Not really. They're saying it's not working, when of course it's working. It's on your phone, because they still want to use the cash. Sometimes they don't pay the taxes related to the sales, so on and so forth.
We don't talk about this here.
Yes.
And one more for you, for your enterprise and retail clients, what is the cost of cash?
No, I can have a very specific answer to this, and the very specific answer is the cost of cash probably sits between 0.2 and 0.3%. So there is something that you can actually perform as a calculation, and it's not a very low one. It can be maybe lower than card acceptance in averages. It can go somewhere around the account-to-account type of payments and so on. But clearly there is a cost of cash. And specifically in Romania, if banks want to get cash from the central bank, there is a cost attached to that. If I compare to other countries, for example, the Czech Republic, you can do this free of charge. You can deposit cash with the central bank free of charge. You can take out cash free of charge. So all the points of the central bank throughout the country act as deposits for cash for all the commercial banks. Whereas here, because of these costs, it's not happening. But banks need to somehow deal with the need coming from the retail part of the banks, where you need to fill in the ATMs with cash, and try to compensate with the collections that are happening on the corporate front, somehow doing like a natural equilibrium between the two.
And Ramona, on the hardware side, how far can cash recycling and smart terminals stretch the economics before the answer becomes just go digital?
Well, I don't believe that we can just say just go digital. So from our perspective, we need to keep the cash as efficient as possible while digital payments follows its natural growth. So there is a cost of cash, and I think my colleague here knows better. So there is a cost of the money, which is the most expensive. The cash in transit, the replenishment, everything. So the service intervention, so all contributes to the overall perspective. So what we are doing from our point of view and how we see it is that during the years, technology progressed a lot, and along with it, it came also the automation. So the automation brought a significant cost reduction when we are talking about cash handling. Of course, we have two discussions here that we have cash handling, big cash handling when we have a big volumes, and we have a low demand. But in regards of automation, no matter what, this applies and improves a lot and gives the greatest value, either it's the merchant side or the financial institution. So,
and Bayame, in lower income markets, who has to pay the price? Banks, state, or customers?
Yeah, this is a great question. Before I answer to that, I just want to mention that cash is still part of the financial infrastructure, and it matters because life of people are not equally digitalized. So many people are on different paths of digitalization. Then that's why cash, it's an important part of infrastructure. Who should bear the cost? This is something that, it's not an easy answer, but there are some ways how we can, let's say, think through the distribution. First of all, my colleagues already mentioned that financial institutions or financial sector players, they can invest in smarter infrastructure in order to decrease the cost of, cash. Then there is the government, the regulation. They really need to be mindful and see how could be, regulation that really can support the vulnerable groups in order to be able to go easily through digital versus cash, access. And the third, I would say that the vulnerable groups should not pay this. And this is a strong statement for me, but we really need to think through that. And there are different ways how this cost can be distributed through, groups of clients that are not part of the bottom line of the pyramid. And there are ways how financial sectors can price the cash in, cash outs to larger amounts in order to keep the a lower base of pyramid or smaller, let's say, smaller amount cash users not affected by that. So in short, financial sector players need to make their part, the regulator, and also us as broader clients of financial sector that are a bit more comfortable on our financial income to bear part of the cost.
I want to remind my panel members that you can jump in if you want to.
Now, here is a very big debate on who's gonna bear the cost and how. It's clear, but the statement is very true. You need to create a framework so that the cost is wider spread, because otherwise there is no incentive for a commercial bank to go into a rural area and have ATMs every 5 kilometers in all of the small villages there. If we look at what's happening, indeed you have there the vulnerable population, but at the same time there is a clear movement towards the bigger cities. You only have few people there, so having a branch, having an ATM, running it and so on, it's a cost that in theory doesn't work for the banks, and this is the real life. So how do we convince the banks to do that? Well, let's incentivize them as well somehow through a wider program, a state-owned program, an European EU program, so on and so forth. So what I'm trying to say is we need to do it at a much larger level. Otherwise, the actors are just gonna act in an economic way, and they're gonna go where it's a profit can be created or where it makes sense. That's why it's not an easy conversation, to be very honest.
It's true. Paul, you are sitting there silently, but I want to ask you. You helped to build Flick, the Slovenian instant P2P. How do you design a product that has to include those who are used to pay in cash? And what's on the ramp that actually converts them rather than just existing?
You need to make something which is easy to use. So UX first, always. Then you need to make something which is free of charge. Okay? So, and you need to address concrete cases. So concrete cases of P2P, I have so many examples on a daily basis. So Flick, if we look at from a perspective in Slovenia, 2 million inhabitants, half the population is already using it. And I believe that without big money in marketing, so it's more about creating, as I said, a good product, easy to use, free of charge. Of course, we could not put a price on P2P; it would never work. And this way, spreading by word of mouth, we can address the segments that are, let's say, less educated in terms of digitalization. So there is no real good strategy in imposing a solution. It's more about working hard to demonstrate to the end user that it has value.
Okay, thank you. And the follow-up to Ramona. From the acceptance side, tokenization, tap to pay on phones, what lowers the barriers for the clients?
I think that the easiest it is to implement and to have it. The most convenient for them is to adopt it. And to give it as an example, what we have now in the market, and I think it's working really good. It is soft POS. Many of you know that we tried at the beginning with MPOS, which it didn't work, but actually maybe it was because this newborn had to come, the soft POS solution. And for the micro merchants, what we see is really accessible and easy to use. They have a lower cost. Everybody has a smartphone they can use. It's easy to onboard. They have no complexity in the integration, and it works really fast. So the easiest to have it and to use it, to implement it, the better for the micro merchant.
Okay, thank you.
Yeah, but sorry if I may, it's also about price. It's always about price.
Yeah, that's true.
And so typically, for example, what we're doing in Slovenia, so of course we give this soft POS to small merchants. But we propose them not only cards, we also propose them Flick. The idea is, the merchant fees, it's not really too easy to break even, especially on low-value transactions. So when you approach a small merchant and you propose him a free of charge soft cost, nice. But 2% merchant fee per transaction, the guy is going to do exactly as Andre said. It's not working, please pay me in cash. So as long as we are not able to really tackle the cost base to make the merchant fee very low, we will not gain penetration in the market.
Okay, thank you. And Bayamet, follow up with you. What is the most common design mistake that excludes people from using it?
Personally, I think that the mistake that really might make the most major effect is actually designing for, or assuming that we are designing for clients that are really digital or quite confident in using digital tools. If we do this generalization, then we really will leave apart a large portion of population. And here I'm looking at the level of trust and level of confidence of a large part of the target groups. What I can say is that for us, we have been engaged in many institutions, supporting them on access to finance, and I can mention some examples that, for example, in Kosovo with CapTrust, we have expanded their digital access through an agent banking partnership with Post Office. For example, this really helped them both on client acquisition, then on credit growth, but also really be there to not just have the growth of existing, but having a higher penetration in rural areas. So I would say that adoption here, or the way how CAP helped, how we helped CAP and how CAP implemented, is that they implemented let's say products that the client could easily go from cash to digital and digital to cash, and it's by the choice or by lack of constraints how they use it.
Okay, thank you. And the next question, we already had a disagreement before the panel near the tents, and in December 2025, cash was EU Council moved to protect the cash as legal tender and introduce digital euro. So as a fallback, so which is it? Is cash a legacy cost we should be minimizing, or critical national infrastructure we are obliged to protect? Who wants to jump in first about cash?
So my clear answer is that we need both. We cannot get rid of the cash, but we need to go and be much, much more digital. Of course, in theory, we should be as digital as possible. However, the recent events taught us that the resilience and the backup that you need to have in place, they need to be there. If Russia comes tomorrow and cuts all the internet lines for your country, what will you do? So, of course, you don't have a solution for that. So, yes, you do still need cash. Moreover, if we go towards the vulnerable people, think of all the grandmas living in the rural areas. They really cannot work, are not digital savvy to work on their phones and do all the check-ins, create their accounts, so on and so forth. So this is not culturally possible if they are 60 plus to teach them something like this at this age. So we need to remain somehow in a still resilient cash mode, but we need to bring the level of digital much, much higher. That's my answer.
Anyone else?
I would really back up Andre in this, because as he mentioned, cash is not just inclusive, but it's also resilience. And of course, we need to move toward digital because it's cheaper, it's faster, it's even faster now. In our region, many countries I'm covering, mostly Western Balkan and Centrally Eastern European. But in Western Balkan, the revolution in payments is happening with SEPA and instant payments. Payment, it's faster than ever. Everybody appreciate it. Everybody is there. But cash is part also of the resilience. So whenever we need it, we should have the layered infrastructure to be able to access it. And we know the world is getting crazy right now, and cyber attacks, cybersecurity. This is the financial sector, I think, is the one that is most prepared, but the one that is most vulnerable due to the frequent attacks and the interest is behind money. So we really need to be careful about that and really be ready to back up whenever such things happen.
And Paul, does an offline digital euro makes cash redundant? What do you think?
We discussed about it before.
So I asked you this question.
So not at all. I believe that the ultimate fallback is cash. You don't need any device, you don't need any electricity, you don't need any nothing. So not mentioning that this offline digital euro case is not really the pure argument to create the digital euro. So end of the day, we still need cash because this is the ultimate fallback. As said my colleagues, as soon as shit hits the fans, cyber attacks, electricity, power cuts, the only stuff that will work all the time is cash. So we need to keep it, even though it has a cost. It's the perfect instrument to serve in difficult situations.
So everyone is for keeping the cash, right? Even you, Ramona.
Yes, we saw it also in other markets who has been already in 90% in digital, Sweden. So they came back and they try to balance, because at some point you need to create a balance. I mean, you cannot go only digital, you have to keep also the cash. So a healthy market, I think it's something in between. And our role as a vendor, it is to keep it efficient, and because we are in the middle actually between the banking institution and the customers, so we have to keep the equilibrium between these two, and we have to provide efficiency and of course as less cost as possible to be effective. So yes.
So no disagreement here. So we see that we have to keep cash and we have to move to digital euro and all of the cashless methods, and the cash has to converge with all of the cashless methods. In one practical move, I want all of you to answer this question. What should a bank in this region actually do in the next 12 months to make that convergence real and for underbanked customers? Just one move from everyone. Who wants to start? Paul.
We did it actually, I would say, as banks. I was thinking about what would be the best example. For me, is topping up cash on an ATM. So you put physical cash and you get it digital directly on your debit card. Or you can do it in a post office also, on a POS terminal. So for me, that's a perfect example of convergence between physical cash and digital money, but it's already in place. It's already there.
Andrei, I'm gonna give a funny answer. It's complicated, and let me start with an example. In our cameras, we caught one person that came, withdrew. They just received their salary. They withdrew from the ATM the cash. Then they went 10 meters to the robot where you could pay your utility bill, deposited the cash in order to pay the utility bill and get the report. Think of the inefficiency of doing that. So long story short, culturally, it's a game that we banks still need to win. And we as the people of this region, let's say, this is not something that you can do in 12 months. You need to make things simpler, and very much alike everywhere, so that it's easier,
whole region.
easier for the people to use it. Sorry.
In the whole region, right?
In the whole region, yes.
Same.
Yes. So that even the vulnerable people find it more easier to access the digital type of solution. This is what we should search to do. Very, very simple.
Miami?
Actually, I mean, it's in line with my colleagues. We really need to. I'm a former banker, although I'm working for the World Bank. And personally, I would really choose one segment, really go through a very detailed customer journey for a simple use case. Andre mentioned utilities. Okay, that thing. And we really see what are the touch points of the clients, what are the pain points and the needs. And that is the moment when we really design a versatile, let's say, service to them. And of course, there are different ways how you can enhance your infrastructure to that. You know, ATMs are becoming quite smart right now, different types of ATM, not just cash in, cash out. I think this is now, every bank should have it, should be an obsolete discussion. But then there are different ways how you can be part of the market. Advice to my banking colleagues would be that, you know, always there is a fear of losing ground or losing clients or by opening to the ecosystem. This is how I see. I don't see now a banking app that you just go, or an ATM. I really recommend that we see the ecosystem. So banks are part of ecosystems, other ecosystems. They are able to really, you know, be in a position that go out of their comfort zone. If this happens, and we have some examples here in the stage the day before about banks that are really going beyond their comfort zone, and they are really trying to engage further and trying to provide their service in a more, let's say, accessible way.
Thank you, Ramona.
Yes, from my point is that we shouldn't bring people into digital. We should bring digital to the people. That's why around, like my colleague said, around all this technology, which everybody knows, so they all access and trust an ATM, they all have physical cards, so everybody is used to it. We have to build around it so that this transition will be smoothly, and they will trust that it's not so risky, even though there are a lot of risk, of course, but they will feel more comfortable. So I think around the demand of the customers, this is from it should start.
And the last one I have, please answer just in one word. Cash in 2030 is gone, niche, or essential? Ramona?
Essential.
Niche.
Niche.
Niche as well.
Okay, thank you. You heard it. And the takeaway that it's not cash or digital, it's how you converge, and it's up to you and up to you as well. And the winners will be those companies who converge it. Thank you very much.